Well, here's our top line story today. U.S. President Donald Trump has lashed out once again at U.S. Fed Chair Jerome Powell in a post on Truth Social that hinted potentially at dismissing the central bank leader one day after Powell warned that the Fed could face a difficult trade-off as tariffs raise prices and potentially cause a slowdown in the U.S. economy. Let's go. There's the post from Donald Trump. The ECB is expected to cut interest rates for the seventh time, and yet too late. Jerome Powell of the Fed, who is always too late and wrong in capital letters, yesterday issued a report which was another and typical complete mess. That's Donald Trump. He goes on to say oil prices are down, groceries, even eggs are down, and the U.S. is getting rich on tariffs. Too late. Should have lowered interest rates like the ECB long ago, but he certainly should lower them now. Powell's termination cannot come fast enough. And that last sentence is getting a lot of attention. It's not clear whether Trump is proposing to dismiss Powell before the end of his term, and that term runs until May of 2026. His term as a governor of the Fed lasts until February 2028. Let's talk about it with our featured guest of the morning. He's John O'Connell, Chairman and CEO of Davis Rea, who is shaking his head like this as I read some of those quotes from Donald Trump. So not for the first time, the President of the United States attacks the Fed, smashing through that traditional relationship of non-interference of politicians in a central bank.
Yeah. I'm sure the Treasury Secretary, Scott Bessent, is encouraging him not to upset the apple cart any further than he already has potentially. Powell's in a tricky spot, as he said yesterday. The chief cause of inflation is the president's tariffs. Gasoline prices are down because the global economy is feared to be going into a recession, and that tends to impact demand. Food prices are actually up the last 2 months. Eggs. I think you have to. I don't think the Federal Reserve Board raising or lowering interest rates is going to affect bird flu in the states and cause birds to stop dying at a pretty rapid pace. Trump has caused a lot of uncertainty, and he's only increasing it by doing this. It's not necessarily healthy. The Treasury bond market last week was becoming unstable for a number of different reasons. Mm-hmm. Some were technical in nature because hedge funds were using excessive leverage in certain areas. That seems to have been most of the cause. There was also speculation that foreigners were selling U.S. Treasury bonds. That's proven to be not the case. Both China, Japan, and Canada increased their holdings of U.S. Treasury bonds, the most recent auction. So I think it was, interest rates had fallen. Everything's a recency bias, where rates were and then where rates are today. Rates were, I think, unsustainably low when the president was first elected. They've increased a little bit. They're probably back more in normal type of range. It's debatable whether the Federal Reserve Board should be lowering interest rates. So far, the economic numbers coming in as of March, before all this reign of uncertainty was introduced, retail sales were strong. Corporate profits are coming in fairly strong for the most part. There are some idiosyncratic differences, for example, United Health this morning. So the economy is actually quite strong, and the economy's been doing pretty well as the Federal Reserve Board has been lowering interest rates, but it's been cautious because people are concerned about a reignition of inflation should these tariffs last for extended periods of time.
It's John O'Connell.